To get into this, the researchers needed ways to measure activeness. They focused on two main things, active share, or AS, and tracking error, TE.
Okay, let's start with active share. What is that exactly?
So active share basically measures how much of fund's portfolio holdings differ from its benchmark index. Think of it like a recipe. The benchmark is the standard recipe, and active share tells you how many ingredients the fund manager changed or, how much they adjusted the amounts. The formula looks at the weight of each stock in the fund versus the index.
So a high active share means the fund manager is making really different choices, picking very different stocks compared to the index.
Precisely. It's often seen as a proxy for genuine stock selection skill, or at least the attempt at it.
Got it. And the other measure was tracking error, TE.
Right, tracking error. This one looks at the results. It measures how much the fund's returns bounce around compared to the benchmark's returns. So it's the volatility of the difference in performance.
Okay, so less about what they hold, more about how bumpy the ride is relative to the index.
Exactly. A high tracking error often suggests the fund is making big factor bets, maybe leaning heavily into growth stocks or value or small caps, things like that, which causes its performance to diverge more volatilely from the overall market index, even if the individual stock picks aren't wildly different.
So active share for stock picks, tracking error for factor bets, or overall risk difference. Both give a picture of active management.
Yep, that's the framework.
Okay, so using these tools, what did the paper actually find about quant funds? Were they super active?
Well, here's where it gets perhaps surprising. The study found that closet indexing, funds that claim to be active but really just hug their benchmark, is actually more common among quant funds than non-quants.
Really? More common.
Yeah, significantly. By the end of 2019, something like 50%, half of the assets in the quant funds they studied were managed by these closet indexers. That compares to about 38% for the non-quant funds.
Wow, 50%. So despite the sophisticated image, a huge chunk is just mimicking the index. Did they find lower active share overall for quants too?
They did. On average, quant active share was about 5 percentage points lower than for non-quants. And even if you only look at funds labeled as active, about 35% of the assets in those active quant funds were effectively closet indexers. For non-quants, that figure was lower, around 24%.